Hello students, in continuation of lecture 57A, now we'll try to prepare this capital account. Okay, so first of all we'll take the balances. Here it is. Okay, the balances are 68, 32, 21,000. So we have taken the balance here. This balance we have taken it here, 68, 32, 21. Then we'll take this loss. Loss will be debited to partners capital account to revaluation account, that is 400, 267, 133. Okay, then come here workman compensation reserve 12,000. Against it there is a liability is 750. Remaining amount will be distributed in partner 750 when deducted from this, it will come 11,250 will be distributed in 3 partner in this 3:1 ratio. Okay, so here we will show by workman compensation reserve, and so it comes 3:1. It is to be distributed when we divide this 11,250 with 6, because this 11,000, because 750 is to be kept for claim, so 11,250 will be divided in 3:1. So his share, if we divide it with 6, it comes 1,875, and 1,875 will be given to Z, and double of it will be given to Y, that is 3,750. Then 3 times that comes 5,625 will be given to C. Okay, after then we will just distribute this amount. Investment fluctuation reserve 6,000 rupees.
Now bank will be credited and debtor will be debited. So here debtors account debit to
so this full value will be
bank
distributed
account.
3 to
This
1,
entry
3
will
to
take
5 to
place.
6 means
Debtors will
3,000,
increase and bank will be decreased with that. Then comes then a provision of doubtful debts is to be created 5%. So 5% we will make the arrangement for that. What is the journal entry?
Cash,
This provision for doubtful debts DR2
market value, patent,
revaluation account, and expenses of revaluation account 2,100 is paid by A. So A's account will be credited and revaluation account will be
3:1 if we make
debited here with that. Okay. Then, prepare necessary ledger account and balance sheet after these admissions. So let us solve the question now.
Just 6, and then so advertisement expenses will be written off, so they will be debited. These will be debited to advertisement suspense. So 875 will come in 1/6 part. 2/6 is 1,750, and 3/6 is 2,700 and 625. Okay. Now this goodwill is to be written off, because if it is given in the balance sheet, so it is to be written off. So in the same 3:1 to 6,000, 3,000, 2,000, 1,000. So to goodwill written off, suspend written off. So it is 3,000, 2,000 and 1,000 rupees. Okay. Investment fluctuation reserve, and now the value of goodwill to be given to retiring partner. So as in the question, no new profit sharing ratio is given here. So whatever amount is to be paid to Z will be borne by remaining partner in this old profit sharing ratio between them after Z retires. So their profit share in this gain, this will be the gaining ratio of two partner 3:2 when Z is retiring, then 3:2 will be the remaining profit sharing ratio of remaining partner. So this is the gaining ratio also. So on this ratio they will bear the amount of goodwill to be given to Z. Okay, so here, so 5 by goodwill, how much? 5,800 is to be given to, it comes 34,800. If we 1/6 of this we calculate, it comes 5,800. This will be borne by X and Y in ratio of 3:2. So the ratio comes, this is 3,400, 3,480 X will bear, and 2,320 Y will bear, and it will given to Z. So here their account will be debited to Z's capital account. This is X 3,480 and Z's 2,000, Y is 2,320, 2,320. Okay, so this way. And the next one is, now in this adjustment, Z took over the investment at market value. So Z's account will be debited with this investment. Our market value is 17,600. So Z's account will be debited to investment. Z 17,600. 17,600. Okay. Now it says liability of creditors is not to be paid. Amount due to Z to be settled on the following basis. 5,067 is to be paid immediately, and now we'll find out the balances, that how much amount remains, and then Z will be paid this, and remaining capital account balances of the partner will be taken. Okay, now we are taking the balances here of this. This is the balance. If we add up this, it comes 29,675. If we deduct this, it comes, the balance of Z capital account is 10,067, means this amount we have to pay to him. So out of this, that it says we have to pay 5,067 to be paid immediately, means 5,067 is to be remaining. Now remains 5,000 that will be paid. Balance is paid by bill of exchange at 3 months, and 50% of the balance within 1 year. So it will be the loan, and this will be the BP. So now what we will do, this 10,067, so here to cash or bank, whatever it is, cash at bank, so bank we will write to bank. Here out of 5,067, so we will reduce this thing 5 1067 is the payment to be made, then in cash, and now remain 5000. Out of that 50% is to be paid by bills payable, means remaining 5000, 50% is how much? 2500. Now 2500 more remains, that is to be paid to this Z's loan account. Okay, and here now we'll take the balance of partners. So it is to bank, to BP, to Z's loan, and now we'll take the balance here, and then here we will put the total. Here we will put the total 29,675. We'll put it here. Now I'll make the total of this and then take the balance. So now when we total up this X capital and Y's capital, it comes to 76,625 here and 37,750 here. When we take the balance of this, it comes 67,120 is the balance of X capital account and 31,430 is the balance of Y's capital account. So students, now we are going to make this balance sheet of this question. Then here this is the old balance sheet, and here cash at bank is 5,750. But this, out of this, the money has been paid to the this retiring partner, amount due to Z to be settled by on the following basis. 5,067 is to be paid immediately. So 5,067 is paid immediately to bank. It is done here. So our old balance is 5,750 minus 5,067. This is to be paid immediately. Remaining balance, bank balance is 683. Okay, now come to the next one. Debtors 40,000. Earlier provision of 2,000 was done, and after this, in this it is told that it is to be created 6%. So 6%, 4 6 24, 2,400 has been done the provision. Now the balance is debtors, this net balance is 37,600. Come to the next, stock 30,000. There is no change in the stock here. Then comes investment, market value 17,600, but this investment has been taken by the Z, so his capital account is here, so it won't be shown here. Patent 10,000. Patent value has gone down by 20%. It says here value of patent is to be reduced by 20%. So patent here 10,000 minus 20% means 2,000 rupees. 8,000 is the value of the patent. Then comes the machinery 50,000. In machinery 90%, it has come to 90%, means 10% has been reduced the value. So 10% of this is 5,000. 5,000 has gone down. 50,000 minus 5,000, it comes 45,000. Okay, so advertisement expenditure already written off, goodwill already written off. Okay, so this way asset side is done. Then come to the liability side. Creditors were 21,000. So creditors, here it says regarding this creditors, it says that a liability of 4,000 included in creditors is not to be paid. So this is creditors of 4,000 are not to be paid. So actual creditors are 21,000 minus 4,000, that is 17,000. Then comes workman compensation reserve. This is distributed, but the claim against it of rupees 750 is there. Liability of workman compensation to the extent of 750 is to be created. So claim is there 750. Then comes investment fluctuation reserve. It is already distributed. Then capital account. Before that capital account, this amount is Z, who is retiring, some amount was paid to him in cash, that was the amount given was 5,067 was given in cash, and 5,000 remained. So 50% of that one bills payable is to be accepted, was accepted, and remaining 2,500 was gone in loan. So this amount, this is paid and this remained. So the 2,500 bills payable and 2,500 loan account, this is shown here. Now come to the capital account. Then capitals we can say here, these are the capital balances of X and Y, 67,120 and 31,413. Total is 98,533. Okay, when we total of this, then total is 121,283 and 121,283. This way the balance sheet is prepared. Okay, thank you.